Welcome back, everybody. Here we are with ticker symbol Nndm, Nano Dimension, and we're going to talk about Nndm stock, but I want you guys to be aware of something. Nndm hit a bottom here, and towards the end of this video, the overall market had hit a bottom on that date as well and started to pull back. Now, not everything is pulling back like we see here for Nndm. Not everything is pulling back correctly in that upward movement for the S&P 500 or the overall market, but we want to look at how treasury yields are reacting and also the S&P 500 overall. So stay tuned till the end of this video for more information on that. We've been updating on that every single day. I know a lot of you guys are appreciating it, and I appreciate your guys' support that continue to watch my videos and also find value in everything that I'm saying. I'm not a negative Nancy. I'm not a bear. I am truly a bull. When stocks are going down, when I know I can short them or there's a possibility to short them or do a put, I don't do that. I look for opportunities to go ahead and jump in and get more so I can ride it back on the way up. That's how much I am a bull. Now, I am not a bear. I like to be prepared and aware. So let's go ahead and jump into this. But I believe that a lot of investors are looking at me as a bear because when I started talking about the stock market correction and stuff like that, I was just letting everybody know, and a lot of people didn't like it. I didn't even like that I had to talk about it, but at least I made everyone aware. I have the peace of mind that I shared that information. Could this have been the bottom and everything that we're going to see later in the video with the S&P 500 index? Probably. Who knows? But if it isn't, we will see in the near future. So let's jump into this. So Nano Dimensions breaks through resistance, and this is why I love chart analysis, and a lot of people are stirring away from this and thinking that charts are not the way to understand the market, even if the market is going down. Oh, well, when the stock was going down all this time, everyone's just like, well, chart analysis are useless in this type of market condition. It's never useless. In a chart analysis, you can catch the bottoms, and if you are a true investor and buyer, you want to know the earliest or the bottom that you can get. So as it was going down every single day, by knowing that it was going to break through support, you would see how far from support you got, and you would be able to catch or time not the exact bottom of that day or the next following day, but at least somewhere in the lowest spectrum of that. So when you're buying into a stock, every single penny counts. So chart analysis tell you or give you some insight on what's happening and how far this can go. Look, chart analysis have told us from the beginning of this downward trend how much further it was going to go every single time. And if it broke through support, you were already aware as an investor that it was going to go lower. If it broke through the next support, you were already aware as an investor that it was going to go lower. Instead of playing the guessing game and saying, oh, I think the bottom is here, and buy here, goes lower, comes right back up. You're like, oh, wow, recovery. And if you're not doing chart analysis or you don't see technical analysis in front of you, you might think this is fine. Bull run has started, and then another collapse. And then you get mad at the market. And then that's why charts are so important. So for now, this is looking like the bottom, and you use this point as a reference to know how far from the bottom you are and how close are you getting to it if this was to pull back. That's why chart analysis are so important, and you can see right here how the resistance was broken through and used as support. That's when you know that the chart analysis is clearly showing you the stock's potential, what's going on. And from that moment forward, if you were hesitant and you're trying to day trade, you see there's different ways to approach it. If you're a long-term investor, you want to catch every single dip you can. If you're a day trader, you would have seen the momentum. The closer it was getting to resistance, you would have to make a decision as an investor from there. And then if you're swing trading, day trading, as soon as it broke through resistance, that's when you go ahead and say, you know what, I'm going to go ahead and take a shot at this, and you ride it up. And then you make a decision if you're going to get out of it in that same day and be a day trader, or are you going to be a swing trader and hold on to it to the next day. But you're already up a few cents anywhere that you could have gone in before the resistance, and then you load it up on the resistance to average up a little bit. I mean, there's just so many different approaches that chart analysis help every single investor. Every single investor that doesn't like charts is the type of investor that's expecting to put their money in the market, take a nap in the morning, wake up at 11 and the stock is up. That is not investing, okay? I want you guys to be aware of that. And I'm not trying to offend anyone. I'm just being honest. So let's go ahead and jump into this. I'm really glad that that resistance level was broken through, that we're seeing some momentum, and the overall market is showing some momentum. But we still have a lot to see. So like I said, stay tuned till the end for that. So here we are. Our new resistance and support. And I want every single investor and viewer to be aware that the 50-day moving average is super important right now. It's 846. If that gets broken through, it could be on its way down into bearish territory. And the next support level to look at is down here at 828. But before getting anywhere near that, we have our support and resistance up here. We're going to look at that after we look at how ARK Invest has been reacting. So here we are with the 8th. This is ARKQ on the 8th, and that was yesterday. Today's the 9th. They had 6,780,081 shares. So if we look at how much they have for today in ARKQ on the 9th, they have 6,858,030 shares. So when you look at the difference from yesterday to today, they're already showing signs of bullishness. See, when ARK Invest buys on the way up, if you guys have been watching my videos and you guys have been watching how ARK Invest reacts, not just to Nano Dimensions, many other ticker symbols within this list, that lets you know how they feel about the company and how they feel about the overall market moving forward. Who buys to average up? I always say this, like when they're averaging up. I never said that ARK Invest lost faith or hope in this company. They're still holding a lot. It was just really concerning to me how much they were letting go, and it was giving me to the insight to think outside the box that the overall market is feeling a little bit rocky. Now that we see them purchase, they just purchased almost 100,000 shares, like 80,000 shares. That is a bold statement. So let's go ahead and see how they reacted in ARKW. So in ARKW, this was ARKW on the 8th. Yesterday, they had 5,654,647 shares. If we look at today, they have 5,642,601. So when you go ahead and look at that, that right there is a slight drop from yesterday to today. They dropped about almost 10,000 shares. So why in one ETF they went up and the other one they dropped? Well, they probably rebalanced here in this whole entire ETF and used some of those funds to put it into other stocks. And anyways, this isn't the main ETF where this Nano Dimensions was supposed to be in ARK Invest. ARK Invest, I guess, put it in another ETF to balance it out in both, but this isn't the main one. The main one has always been ARKQ, and the fact that they bought with ARKQ, that right there is a bold statement. And that's what I love about ARK Invest, that when the stock is going down, they could have been averaging down all this time, loading up the boat. They load up the boat as it's going up. That's when the bold statements are starting to be made. We need to see how the market continues, and I want to really look at how she reacts, ARK Invest, and Kathy Wood, obviously she, the rest of this week. Will she buy more? If it dips, is she going to sell? Like, I want to see her reactions. That will tell us a lot about the market overall. So here we are with our support, 918. If that gets broken through, this could be on its way down to newer lows, new support levels, and getting closer to the 50-day moving average. So you definitely want to watch this carefully if it crosses 918, and how quickly is it moving to newer lows, and between support and the 50-day moving average is a window to see who is trying to maintain control over the chart. Now, for the bulls to maintain control and continue this momentum, they need to break through 973, turn that into a support to reach newer highs and new resistance levels. I look forward to seeing your guys' thoughts on this. It's pretty exciting to see Nano Dimensions get added more shares to ARKQ. I look forward to seeing your guys' thoughts again, as I said. And as always, let's make some money. And if you learned something new, subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community. And don't forget to hit the like button to let me know you watched this video. Stay tuned till the very end because we have a lot to cover about the 10-year Treasury and the S&P 500 index. why is the market up, and have we hit the bottom of the crash, quote unquote, or correction here, right? That's the question. So the first thing is stimulus is in the works of being passed. Everyone's excited. That's building that anticipation and excitement moving forward. But also the 10-year treasury has hit a peak here on Friday of 1.57. It had cooled off. It ran up to newer highs on Monday. And now from Monday to today, it's been dropping down and cooling off. And it's been hitting newer lows every single time. This is helping the market tremendously, that the yields are going downwards. At some point, if this was to not go any lower, the market could continue to go upwards, like I've said before, because they will detach from each other. But right now, we've noticed the effects of this going up really fast, bringing down the market, and it going down pretty fast and bringing up the market. So we need to see them both detach at some point, but right now they're correlating pretty well. So one goes down, one goes up. Now, this has also the mix of the anticipation of stimulus. But another thing too, this may have been the bottom for one reason only. The fact that institutional investors and retail investors were loading up the boat. If you saw my previous videos about that article, this was fueled. I mean, that run was so fast that if you're looking at it from the sidelines, you're like, someone knows something, right? So it was in the hopes of stimulus. Stimulus is passed. Then this spikes downwards because of the fact that we hit an all-time high again of 1.6 and some change in the 10-year treasury. And then today we have a run as it's going downwards. And now it's going lower and the market is still going downwards. So that's how we're noticing that there will be a detachment coming soon. But I wouldn't be surprised for this to go lower or hang out sideways and for the S&P 500 index to dip a little bit more in the coming days, because it's just natural. The indicators in my chart are showing that, and all the different indicators that I've looked at, they're showing that there is some room for a potential slight pullback a little further. Even if it spikes up, pull back a little bit further, and then if there's strength in the market, it will spike right back up to newer highs or try to break even. Now, the first thing I'm noticing is the fact that if we stay away from down here, and could we retest that? Possibly, but if we stay away from that down here, this is showing strength in the market overall, and that may have been the bottom. So all these dips were an opportunity, and if we retest this, every dip towards it, and even if we break through it, is an opportunity, because in the midst of this downward trend is the beginning of the next bull run. The only thing I can see pulling down the market in the near future, if the Federal Reserve talks about it next week or next month, whenever they decide to do it, is the year-over-year inflation. And that's going to surprise the market just a bit. Don't be surprised. Be prepared. I always tell you guys, it's not about being a bear. It's about being prepared and aware. As always, guys, if you learned something new, subscribe, share this with your friends and community. Thank you guys so much for watching, and let's make some money.